Good evening or good morning, whatever time it is. I hope you are having a good one. Today I'm going to be talking about Tuesday, February the 18th, 2025, and the rest of the week. I'll be going over what data sets we have going on, what earnings, and anything else I see that I need to talk about, as well as the overall S&P. So with that said, let's go ahead and get straight into the data. Now we have a decent amount of data this week, but we also have a shorter week because obviously uh, Monday the 17th was not trading due to President's Day. So on Tuesday, let's go ahead and make sure you guys have that on the screen. Yes, we do. All right. So on Tuesday, we have Trump speaking at 5 p.m. I'm not sure if this will change, but from everything I've seen, that's what time it is starting at. But this can change, so just be aware that, from what I know, this is at 5 p.m. Uh, we have the New York State Manufacturing Index data coming out at 8:30 a.m., so that's in the pre-market. It shouldn't really move the market too much, but when we don't have a lot of data going on, then any data is something. So that might be something that the market decides to move off of. So just pay attention to that. Um, we have FOC member or FOMC member Daly speaking. I don't really track his speeches at all. It's not too important to me. If he does say something important, then the market will obviously react and we'll be able to find out what he said. So moving on to Wednesday the 19th, we have the building permit data at 8:30 in the morning, so the pre-market, as well as the housing starts and the housing data. At 10:30, we have the Atlanta GDP, as well as later in the day at 1 p.m., we have the 20-year bond auction. I'm not expecting those rates to go lower. I'm expecting probably closer to the 5% as we have not been getting good news. But with the tariffs being postponed until April 2nd, which it has been confirmed it's going to be the 2nd of April, that gives the market a whole nother 2 to 3 weeks to run off of, essentially any data we get. It's going to be it's going to be good data compared to whatever the tariffs are going to be. So, with that said, at 2 p.m. we have the FOMC meeting minutes. I'm really not expecting anything from those because very likely it's going to say that um, Powell and the rest of the Fed are all in agreement that they need to see more data. That's pretty much what Powell said the last two FOMCs now, and it's very likely the meeting minutes won't be showing us any signal one way or another. We're in a state of the market right now and the economy where we're either still potentially going to be having a labor market issue or we are going to start seeing inflation creep back up. We're not in a stance where we're going to get the soft landing, and I know many people are assuming that we will, but uh, it's either one or the other. Something's going to tip the scale here, and the Fed needs to figure out which side is one side deserves cuts, one side deserves rate hikes. So we will see how that goes. We need to see more data before we can even truly make assumptions about that. Moving into Thursday, we have the standard jobless claims data that comes out every single week. I'm not expecting it to come in one way or another. Right now, the consensus expects it to basically be almost the exact same as it was last week. So we will just see how that turns out. Again, I'm not leaning towards it one way or another. At 1 p.m. we have the 30-year TIPS auctions, which that's not too important. The TIPS auctions are basically like a hedge to the standard bond, so you can think of it almost as like an inverse bond. I know that's a little wonky and complicated, but uh, it's not super important, but I'm expecting the yield on that to increase. Friday is probably the largest day of the week, as we have a ton of PMI data at 9:45 in the morning. That's 15 minutes after market open. And then we have a bunch of Michigan inflation data coming out, so a bunch of inflation expectations and all that good stuff, consumer sentiment. So, um, any of these data sets in here can make the market move one way or another. So just be aware that on Friday that around that 15 to 30 minutes after the market opens, a lot of data releases, and it's very likely going to push the market up or down one direction or another. Now, going over earnings, and I'm not going to pull up the actual earnings calendar because there's really nothing I'm interested in this week. I mean, there's only two companies that I'm looking at for earnings, which Wednesday it's the after hour Carvana. Uh, I am not sure if I'm going to play options on it or not. If I do, I'll post some sort of TA or play about it, but it's that, and we have Rivian Automotive on Thursday in the after hours. So two car plays. I know they're a little different, but um basically that's it for this week in terms of earnings. There's nothing tech heavy. There's nothing that's gonna move the market too much. Just a quick reminder before we get into the technical analysis. If you've been finding value in my insights, consider joining my Patreon. For just $12.99 a month, you'll get access to my trades, courses, and powerful tools to help you grow as a trader. I'd love to have you be a part of our team and community. And it's less than 43 cents a day. So if you'd like to join, click in the link in the description. Thanks. And with that said, let's go ahead and get right into the daily chart. And as always, let's go over the moving averages. So the 5 mile is currently, let me zoom in on this a little bit more. So the 5 mile is currently at 606.59, but since we closed at 609.70, it's very likely we're going to see the 5 mile open very likely around that 607.40-ish range, give or take. And then we have the 10 mile, which is going to open, or which is currently at 604.38. So the 5 mile is starting to pull away from the 20 mile and 10 mile as the 20 mile and 10 mile are starting to consolidate together more. As you can see, the 20 mile has been pulling up, the 10 mile pulled up, and now it's kind of just flatlining and waiting for the move. The 5 mile pulled up, pulled downward, and now it's pulling back up. So the 20 mile is at the 604.06, so very close to where the 10 mile is right now. And then we have the upper Bollinger currently at 611.41. It's very likely that's going to open around 613, give or take, just because that moves up each time the 20 mile moves up, and each time the 5 mile moves up, the 20 mile moves up. So with the 5 mile pulling up aggressively, we should see the upper Bollinger starting to open up as well. And with this upper Bollinger, I want to quickly show you QQQ. One moment. Let me scroll to it. I apologize. All right. Uh, QQQ is already kind of sort of doing their upper Bollinger. Currently in the overnight, they're at 539.38. And for those who don't know what QQQ is, that's the tech ETF. So it's kind of like a SPY type holding. It's just extremely tech heavy. It holds a lot of the top companies. So I like to look towards what tech's doing to determine what the rest of the market can, have expectations to follow up with. So we had Friday give us the first upper Bollinger move. Now it wasn't very aggressive. I mean, yeah, Friday was a very aggressive buying day, but this upper Bollinger move is barely above that upper Bollinger. Um, the upper Bollinger is at 538.04, and so likely just like with the SPY, that's going to open up as well. That's very likely going to open around 539, 540-ish. So depending on how the overnight goes and how the pre-market goes, then we already have QQQ opening at their upper Bollinger. Uh, which that kind of means two different things. When we have upper Bollingers, usually on the second day of the upper Bollinger, we start to see some selling or consolidating towards the third or fourth day where we meet back up with the 5 mile. So with QQQ already being at the upper Bollinger and technically Tuesday the 18th is going to be day two, um, just have to be aware that that can either be that could either be a really good short, or they could probably run it for a day three and act that and treat that as if it was the day two, if that makes sense. Basically saying that this wasn't day one of the upper Bollinger move. Now, I'm not saying that's what they will do, and by they I mean the dealers. I always have to clarify that now because I always get comments about it saying I'm ignorant for saying the market is controlled by they. When I say they, I mean the dealers and the market makers, so please understand that. I hate having to explain that. Um, but yeah, we have to be aware with QQQ right now. Uh, it completed a cup on the daily, completed a cup, formed a handle, and this can also be a large cup as well. So, uh, this is going to start topping out soon, and by topping out, I mean in the short term, I don't mean that this is, the end of tech, right? This is a short-term thing. So if they treat this as the upper Bollinger day one, we should expect a higher high on upper Bollinger day two, which would be this Tuesday, right? The 18th. And then we should start to see that consolidation down to the 5 mile. Uh, with that said, SPY has not hit the upper Bollinger yet. So if we're gonna be seeing an upper Bollinger move on QQQ happen, then technically SPY will start to pull down a little sooner than most might anticipate. So just be aware of that if we do actually get our upper Bollinger move, which it looks like we're going to. The after or the overnight is at 6:10:88, so it's already getting ready to start pushing all-time highs and very likely push into the upper Bollinger at open or very likely soon after open. And with the upper Bollinger push, we should see all the way to potentially 6:14 on the day tomorrow. No, I'll go over that in just a second. I want to go over the 4-hour chart. Now, generally, I would show the hourly chart, but with the Webull program, the 4-hour has been looking a little cleaner to show examples on. So I wanted to kind of go over the structures I'm seeing. That's kind of what I'm going to use these smaller time frames to do from now on, is to go over structures that I'm seeing that are potentially very strong or not. And what we have right here, and I've highlighted this over a few different videos, we have a very strong double bottom right here. And I'll draw this out. You're gonna see all these other channels, I apologize. I'm not gonna go over these because I'm very likely gonna start deleting these channels and not focusing on them in the videos. I'll explain that at a different time. But for now, there is the double bottom. Okay, we're gonna highlight this with yellow to show that it is bullish. Right? I know that doesn't look great, I apologize. And then we have a cup and handle. So we have the cup formed, and we have the handle. Okay, and we are also going to make this yellow to show that it is bullish. And we have the consolidation channel top, which I didn't really want to discuss in this video, but we're starting to build towards that to break out. It's very likely we do break out of that, but just focusing on the structures for now. We have the double bottom, we have the cup, we have the handle, we have the cup, this nested cup, which is the handle. Now we need to see a handle form on that to break us out of this consolidation period or channel. and to start taking us, upward. Now, what we would like to look for here is further bullish structure, which we actually do have some pretty decent bullish structure here. We have an inverse head and shoulders here forming. So we have plenty of liquidity. Doesn't look like it, but there is an inverse head and shoulders right there to form the breakout above if they really want to. But let me just back that out for a second. So very likely the expectation should be that we're gonna head higher. That's kind of what I'm trying to signify here. There's a ton of bullish structure that's telling us, hey, we're getting ready to leg up. Where we're going to leg up to is very likely within that 614, 615 area, if not even potentially further. Like I said, QQQ can still push quite a bit. SPY hasn't even started its push, and um, it's looking like it wants to do that right now. We're seeing the overnight currently getting ready to break the 611 points, so it's already preparing to break out. So it's very likely we see that move up. Now, since this is a top of a cups handle, what I'm looking for in this area, so this region, give or take, I'm starting to look for bear structures. So if we are going to see this breakout, which I anticipate we will, then we're very likely going to see some sort of bear structure form, something like that. And this is to test support. This is actually bullish liquidity, even though it's going to be a bearish structure, but that's to form the top of the cup and to pull down to form a handle. And the handle's to form at the 5 MA on the daily chart. It's not going to look pretty. Never mind, we're going to go back to the 4 hour. But basically, we're looking for a bearish structure to pull us downward. If the bulls need more liquidity, then we are going to see a further bullish structure build in this area right here that we're currently at. Hold on, let me just delete these last two because the undo button is not working. So, for example, we have a left shoulder right there. We could come down, form a head, form a right shoulder, and then break out. But I'm really not anticipating us to start heading down unless we again form that head and shoulders or some sort of bear structure. It could be like a head and shoulders or a large inverse cup, something to that effect. It should stay above this consolidation line. For example, this consolidation line should kind of turn into a bottom consolidation channel eventually, and they should start, building the market up in this area. That's kind of the expectation, but again, we have to wait for that move to actually happen before we start planning around that. But all the signals and everything so far is telling me, hey, we're getting ready to move upward. We have a ton of really good bullish structure. We should be anticipating the move to that 614 area very likely. I know on Friday I was saying 613 close, and some people go to me about it, but I don't really care at this point. We have a ton of bullish structure. If you look throughout the charts, I mean, on Nvidia, Microsoft, Meta, uh, Broadcom, I mean, you name it, there's massive bullish structures saying, hey, the market is getting ready to move upward. So, uh, with that said, we should listen, and it's very likely going to take us upward. Now, if you're wanting to short this, you really have to wait until you see bearish structure. If you try to short this early, your puts are going to be basically burned, because each day the 5 MA is moving up, and each time that moves up, each session that moves up, it pulls the support up as well. So for example, it's at 606.59 right now. I believe I said it's going to open around the 607.40. If we get the upper Bollinger move today on Tuesday the 18th, like I anticipate, then we're very likely going to see the market at 613, 614, which means that um, the 5 mile is already going to be around the 611-ish mark, give or take by Wednesday open, which that means any puts taken below 611, 612, 613 are going to be entirely just destroyed. I mean, they're pulling support above it, and that's what upper Bollinger moves do. We've seen it happen many, many times, and we've discussed it many times. It's a consistent uh, mechanic that happens with the market. So just be wary about that if you are trying to short that. My rule is usually wait for the second day of the upper Bollinger, and again, we haven't seen that on the SPY yet. We still need to wait for the first day to happen. So just be aware of that if you're trying to short things. With all that said, though, I'm going to be taking this week to focus on working on the Discord and some other things so that I can be able to provide everyone better technical analysis and educational content. Um, just a reminder that on the 22nd, we will be making some of the educational content that I've personally written uh, locked behind the subscription, which is going to be $12.99 a month. It's less than 43 cents a day. Um, that'll also kind of lock my plays, my trades, things like that. But the rest of the server will be free. So if you enjoy being on the server and you enjoy chatting with everyone and trading ideas and tips and everything, then please, I implore you to stay. We highly encourage you to stay. We're not gonna try to force charges on you or anything else. This is for only any of the content that I put out. Um, and I've explained it a little, but I do need a little help with residual income. Um, I am a full-time day trader, but I'm also a full-time father to a child who needs a lot of specialized help, and with doing those two basically jobs full-time, along with teaching, yeah, I need a little residual income to help out. It's starting to become difficult to take away from my portfolio every month. So any support greatly helps, and it will help me be able to set up an office and be able to eventually live stream these videos for you guys, live stream trades, and just produce better content and better trading and education and everything. So with that said, I look forward to hopefully many of you subscribing to that, but please do not feel inclined. You do not have to. Um, that is only for my specific content. Uh, but yeah, with that said, I hope everyone trades safe this week. And um, again, just my expectations are we are gonna have a very bullish week, and we should see all-time highs on the SPY. It's extremely, extremely likely unless we have some sort of bad news that pulls things down. But I don't see that happening right now, and very likely the rest of the market kind of is within agreement of that because that's why we ran so hard the last two sessions. So yeah, I'll stop rambling. Uh, Everyone have a good day, and I will talk to you later.